Hey everyone, welcome back to the channel. If you're a crypto enthusiast, you're probably aware that the market has been on a downward spiral lately, with Bitcoin, Ethereum, and several altcoins seeing major price drops. But what if I told you that a very specific factor could be responsible for this recent crash? Yes, we're talking about Donald Trump's tariffs. Today, we'll explore how the former president's trade policies might have had an unexpected yet significant impact on the world of crypto. Let's dive in. So, let's start by taking a look at the crypto crash itself. Over the last few weeks, we've seen some heavy losses across the board. Bitcoin, which had been hovering around the $80,000 mark, has taken a dive. Ethereum, once close to $4,000, is now struggling to stay above $2,000. And it's not just the major coins, altcoins have been hit hard too. But what caused these dips? Was it just another cycle of market volatility? Or is there more to the story? Well, we're now seeing that some of the biggest players in the global economy, including the US, are influencing the market in ways we didn't expect. And that's where Trump's tariffs come into play. Let's rewind a few years. Back in 2018, Donald Trump initiated a series of tariffs targeting China and other countries as part of his America First trade policy. These tariffs, which were originally imposed on steel, aluminum, and other goods, quickly escalated into a full-blown trade war. While much of the focus was on traditional industries like manufacturing and agriculture, not many analysts foresaw the ripple effect that these tariffs would have on sectors like technology and crypto. Fast forward to today, and we can trace some of the volatility we're seeing in the crypto market directly back to these tariffs. China, being a key player in global cryptocurrency mining and trading, was directly impacted by these tariffs. The rise in tariffs disrupted supply chains, including hardware used for mining, and limited international trade in critical areas for the crypto ecosystem. This created a level of uncertainty that investors simply didn't know how to handle. So, what exactly are the key factors here? Well, first, we have to acknowledge China's role. As one of the biggest players in crypto mining, Chinese miners are responsible for a large chunk of Bitcoin's hashing power. When tariffs made it more expensive for Chinese companies to import mining equipment, it had an immediate effect on the global mining landscape. Miners were forced to adjust their operations. Some scaled back, others moved their operations elsewhere. The uncertainty surrounding tariffs led to shifts in mining activity, which in turn impacted Bitcoin's price. More importantly, these geopolitical tensions created a sense of instability. When there's instability in global trade, investors tend to pull away from high-risk assets, and that's exactly what happened here. But that's not all. With the ongoing trade tensions, the overall market was already in a fragile state. The tariffs also brought a lot of negative sentiment to global financial markets in general. Investors started pulling out of assets like stocks and cryptocurrencies to seek safer havens. This led to a massive sell-off in crypto, exacerbating the price drops we saw. Now, while Trump's tariffs were a huge factor, they weren't the only policy shift affecting the market. As we know, global economies are deeply interconnected. When the US imposes tariffs, it's not just about affecting one country. It sets off a chain reaction. Countries retaliate, industries shift, and global trade is disrupted. This uncertainty around trade policies and the overall economic outlook creates a ripple effect that reaches every corner of the financial world. And when it comes to cryptocurrency, which thrives on a decentralized global framework, these disruptions are amplified. The lack of clarity around international trade policies, especially those involving major crypto players, made investors question the stability of the entire market. So, What does all of this mean for us as crypto enthusiasts? For one, we're seeing more volatility, but that's not all. When the market drops like this, we also see a lot of uncertainty around regulation. Could more tariffs be coming? Will countries like China continue to tighten their grip on crypto mining? And will that cause even more disruption to global trade? For investors, it's a tough pill to swallow. The recent crash has created fear, and when fear takes over, people tend to panic. This leads to a self-fulfilling prophecy, where the fear of further losses causes even more selling, and the cycle continues. But here's the thing. These market corrections, while uncomfortable, aren't new to crypto. We've seen crashes before, and the market has bounced back. The real question is, will this time be different, or will crypto prove its resilience once again? As we look to the future, a few key things could determine whether the market stabilizes or continues to fluctuate. First, we need to keep an eye on US trade policies. Will President Trump ease tariffs and work toward more balanced international trade relations? Or will tariffs continue to create uncertainty, especially around global supply chains that impact mining operations? Second, we have to consider what central banks and governments might do next. Are we going to see more regulation around crypto, or will governments find ways to embrace blockchain and cryptocurrencies as legitimate assets? The next few months will be critical in shaping the future of crypto in a post-tariff world. So, what are your thoughts? Do you think Trump's tariffs are a major factor behind this crypto crash, or do you think there are other forces at play? Drop your thoughts in the comments below. I'd love to hear from you. And if you enjoyed this video and want to stay updated on all things crypto, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss an update. Thanks for watching, and until next time, stay informed and keep hodling.